If we lose, you're going to have a crash like you wouldn't believe. If we don't win the next election, the stock market will crash. The stock market is up is because people think I am going to win.
What happens when two of the world's closest trading partners start fighting over money? Well, it's not pretty. Donald Trump's tariffs, taxes on imported goods, have sparked a global trade war, and one of the biggest battles is happening right next door. Canada.
We're worried about a U.S. recession.
Trade war could push the economy into some sort of recession.
A recession in the next 12 months is becoming more likely.
I wouldn't be surprised if we haven't even...
But how exactly are these tariffs affecting the U.S. economy, and why should you care? Let's break it down. Explaining tariffs and the trade war. First, let's talk about what tariffs actually are. Imagine you're buying a toy from another country. The U.S. government can add a tax to that toy, making it more expensive. That's a tariff. President Trump introduced these taxes to protect American businesses and jobs, but not everyone agrees it's working. The trade war started when the U.S. slapped tariffs on steel and aluminum from countries like China, Mexico, and Canada. Canada, being one of America's biggest trading partners, didn't take this lightly. They hit back with their own tariffs on U.S. goods like ketchup, whiskey, and even toilet paper. The U.S.-Canada trade relationship. Here's the thing, the U.S. and Canada are like best friends when it comes to trade. Every day, goods worth over $2 billion cross the border. From cars to food to energy, the two countries rely on each other. But when tariffs entered the picture, things got messy. For example, the U.S. imposed a 25% tariff on Canadian steel and a 10% tariff on aluminum. This was meant to boost American steel and aluminum industries. But guess what? It also made things more expensive for U.S. companies that rely on these materials, like car manufacturers. How tariffs are affecting Americans. So how do these tariffs affect you? Let's break it down. A study by the Tax Foundation found that Trump's tariffs could cost the average American household about $1,000 per year. When companies pay more for imported materials like steel, aluminum, or energy, they pass those costs on to consumers. For example, washing machine prices jumped nearly 12% after tariffs were imposed, and gas prices rose by up to 50 cents per gallon in some areas due to a 10% tariff on Canadian energy. But it's not just about higher prices. Tariffs also hurt jobs and industries. Harley-Davidson moved some production overseas to avoid tariffs, costing American jobs. Meanwhile, U.S. farmers faced financial losses as Canadian tariffs reduced demand for crops like soybeans and vegetables. Even manufacturing and construction industries struggled with rising costs for materials, leading to strained profits and higher prices for everyday goods. In short, tariffs ripple through the economy, hitting wallets and livelihoods hard. Canada's response and the electricity threat. Now let's focus on Canada. Canada isn't just sitting back, they're fighting hard. They've imposed tariffs on $12.6 billion worth of U.S. goods. But here's where it gets really interesting. Canada has even threatened to cut off electricity exports to the U.S. Wait, what? Yes, you heard that right. Canada supplies about 8% of the electricity used in the U.S., especially in states like New York and New England. If Canada were to cut this off, it could lead to higher energy costs and even blackouts in some areas. Economic indicators and market reactions. The escalating trade tensions had palpable effects on financial markets. 1. Stock market volatility. The S&P 500 experienced significant declines, nearing a 10% drop, as investors grappled with the uncertainties stemming from the trade war. Financial institutions like HSBC and Goldman Sachs projected further downturns, raising alarms about a potential recession. Second, investor sentiment. The looming threat of a prolonged trade war led to increased market volatility, with investors seeking safer assets amidst the economic uncertainty. Political ramifications. The tariffs also had significant political fallout. 1. Diplomatic strains. The G7 summit became a focal point of tension, with U.S. Secretary of State Marco Rubio facing a chilly reception from allies. President Trump's suggestion of reintegrating Russia into the G8 further complicated relations, highlighting the deepening rift between the U.S. and its traditional allies. 2. Domestic politics. Within the U.S., the tariffs became a polarizing issue. While some praised the move as a necessary step to protect American jobs, others criticized it for escalating costs and straining international relationships. Long-term economic projections. Analysts and economic institutions provided sobering forecasts. 1. Gross Domestic Product, rate or GDP. The Peterson Institute for International Economics estimated that sustained tariffs could reduce U.S. GDP by billions over the next decade, underscoring the potential long-term damage to the economy. Second, household impact. The Tax Foundation projected that the initial 10% tariff on Chinese imports would add $172 to the tax burden per U.S. household. With the expanded tariffs on Canadian goods, American households faced an even greater financial strain, reducing their purchasing power and altering consumption patterns. So where do we go from here? Trade wars are complicated, and there's no easy answer. Some experts say the tariffs could lead to higher inflation, while others believe they'll eventually force other countries to play fair. One thing's for sure, the US and Canada need each other. Whether it's finding a compromise or ending the tariffs altogether, the stakes are too high to ignore. And that's the story of how Donald Trump's tariffs are shaking up the economy. If you found this video helpful, don't forget to give it a thumbs up and hit that subscribe button and ring the notification bell to never miss any future updates. Thanks for watching, and we'll see you in the next video.